Good morning, this is Sun Kim's weekly global briefing on the 25th of May. As you see, last week China passed the security law in their two big national meetings, and now the United States and the other Western countries, they are now pressing the China to not to do that, and if they do, unless they abandon the security law to Hong Kong, then they will abandon the special right to the Hong Kong also. Now the global world shows some kind of dispute between the U.S. and China together, not only in the trade and the financial world, but also in diplomatic and also in military perspectives. So we have to check this week about these two things, about the US-China dispute and the Hong Kong issues. And also I'm really glad that hopefully the traffic of the truck is restored in United States, so that maybe in a month I think the demand will restore as it were before the coronavirus. So let's check the indices and the commodities first. Here it shows the Dow Jones shows a bear market, but the Nasdaq and S&P 500 shows the bull market, and but it is not as strong as you expected. This just shows the very small, just a small movement, and made box parents each other. All three indices. The Dow and all three indices shows the gap start on Monday, and then they made the box patterns on this week. And because of the Nasdaq has big tech companies like Google, like FANG, the Facebook, Amazon, and Google, Alphabet, whatever. Okay, and the S&P also it is influenced by those big tech companies, but the Dow Jones reflects more of the real world, the real consumers companies, so that Dow Jones shows a very small drop, but it made the box patterns too. And one funny thing is that the VIX shows only the 30 lines, although on Wednesday and Thursday the China says that they passed the security law to the Hong Kong, but and the China and the US also attack about the issues, and then they pressed China to free the Hong Kong. But the problem is that VIX doesn't change it that much. The funny thing is that the VIX dropped dramatically on Wednesday and Thursday, and now it is stabilized on 30s. So that means that now the big issue is not the US-China dispute, but the recovering of the US economy. And commodities shows that the gold, silver, and platinum, they goes up, and the palladium and copper go down. And you see that the gold shows a little changes, and silver and platinum, they shows a really big jump. And the platinum, in case of platinum, it shows a really big bull market on Tuesday and Wednesday, I think, but it dropped again on Thursday. So now they are making some kind of price adjustment, but hopefully the gold, silver, and platinum, the safe haven, these will go up. This will make some kind of bull market and modest tempo. And palladium and copper, they go down, and palladium raised more than $2,100, but it dropped dramatically on Thursday again, and now it keeps the lines at the 1981. And I think still the real world have to wait until the demand is recovered. So the copper, so does the copper, and I already told you on last week that copper. We have to check the copper whether it recovers the price until the $2.50 or not. And now it is going up in modest way, but we have to check it out that too. All three oils, they all made a bear market, but one good news is that they kept the $30 to $35 box patterns, and especially the Brent oil, they kept the $35 to $40 box patterns. And I think that the shale oil is the most important issue for that, and I'll talk to you later about today's this weekly focus. Okay. And weekly news, I brought three things, one from Bloomberg and two from Wall Street Journal. And number one, the Beijing warns Americans are pushing countries toward new Cold War. It's already started, the new Cold War, maybe a couple of years ago when the US-China trade dispute begins. And then nowadays, China is really fearing about the US counterattack, and also from the Western countries, because they recovered so fast. What China expected, maybe they think maybe on this whole year all the Western countries will be suffer from the COVID-19, but it is recovered much sooner than they expected, so that they are really feared about it. And also the problem is that the US started to make some kind of military pressure on South China Sea, and then they approved to sell the Taiwan and Singapore to the weapons. They are really fearing about that. Especially in Taiwan, the US approved the F-16 fighters selling. It is approved in Congress, and especially it is the latest version, and maybe it can beat them up the Chinese fighters in mainland. So we have to check this up too. And number two, coronavirus threatens to hobble the U.S. shale oil boom for years. So there are two reasons why that happens. And number one, the shale oil companies, they have a really big problem in money market. They made too many bonds and also have no money. So they have no money to develop the new oil well and the new fracking method, and they have no money to borrow the equipment. So that is the number one reason. And number two is that the oil demand is still low, although the U.S. demand is recovering, but it takes time, maybe a couple of months, I think. So in July, the real oil demand will recover, I think. And then so these two reasons pressed small shale oil companies very harshly, and now they have two choices: bankrupt filing, or Chapter 11 filing, or the M&A with the oil major. So we have to check this up too. Number three, U.S. blacklists Chinese entities over human rights military allegations. So as you know, the espionage on the military information of the China against the U.S., that makes really get mad to U.S. And then they made a blacklist 33 personal, enterprise, and also some agencies at the China. So it will make the real market chill down. And also the U.S. made some kind of blockage of the chip export, semiconductor chip export to the China, to especially Huawei. So it will make other issues. So we'll check the market forecast, and the stock index will have a price adjustment because of U.S.-China trade dispute, and not only the trade, but also the so many disputes against their supremacy and the dominance of the global world, and especially the Hong Kong issues is really being matter. So it'll really shake the market this week. Maybe on next Monday or Tuesday it will come down, but the protest in Hong Kong will last long, and don't worry about that. The risk is already reflected in the market on last year, so it won't shake that a long time. But it is a kind of headache for this week. Number 2, oats. That makes there is newest pick every day. Then really rises, skyrockets, and really strong bullish market on the oats. And meanwhile, the wheat price is very low, and so does the soybeans. So we have to check it out. But maybe in a couple of months, maybe in July, it will rise up again because the wheat is not so good in the production of May, I think. And also the mids are making low range box patterns, and the demand will go up, and maybe on July it also will rise, make some kind of bullish market on July, I think. And finally, oil price is adjusting again, and the shale is the crucial factors for oil pricing. So the shale companies, they have only two choices, as I mentioned before. So the small shale companies will be bankrupt, and then they will crush, and then or they'll be merged to the oil majors, just like a Chevron or the ExxonMobil. But maybe Occidentals and the Diamondbacks or some big shale companies, they will resist the long time. So we have to check the issues of that. Finally, the weekly focus is the US-China dispute is getting worse. And as you see, they are fighting for every single perspective. They are fighting each other. And the problem is that China is start to fear about the power of the US. And now the problem is that US is really makes a plan to make a retaliation of the coronavirus problems. In China, they have to make some kind of plan how to get escape from that retaliation. That is another issue, especially in Hong Kong. They have to show that some kind of negotiation about the Hong Kong issues. But I think maybe the negotiation can be broken this week. And number 2, does the influence U.S. reopening recovers economy quickly? I am not sure. I think that although the truck traffic it recovered as it was before, and the fuel demands like gasoline and the diesel, it rises, but the problem is that it takes time to reflect this real recovery to the market. Maybe a month or a couple of months it takes. So we have to check until the end of June whether the demand is recovered or not. Number 3, is the imbalance of food supply realized? This is really serious for the global market, because you know that if the US said, okay, we have not much foods to sell to the global market, so we'll close the market, then the food price, especially the grain and the meat price, will goes up, and it'll make a really skyscraping costs. And we'll have some kind of short time price problems on the food. So and especially 40% of the global countries, they are importing the U.S. grain and U.S. meats, and that will be a really big trouble for the markets. So we have to check that out. We have to check two things. Number 1, whether the wheat production is increased or not. Number 2, whether the pork production is restored or not. We have to check two things for the June, this week and June. So this is the end of the weekly global briefing, and keep your principle and hold tight, because the market will be shaken by the US-China dispute. And God bless you. Thank you.